Guys, we're live. Welcome to the show today. Thanks so much. We're actually going to discuss Chipotle post. It's already done and already completed 50 to 1 stock split. What are the ramifications? Is it actually a stock that you want to buy and hold long term? Thanks so much for joining today's show. If you haven't already, do me a favor. Do go and click and subscribe because it goes a lot of way in helping the algorithm and helping to support this channel so I can bring this type of great content to you on a weekly basis, on a double weekly basis, so I can analyze this stock, other stocks, and help you on your way to become a wealthy, healthy, and very smart, intelligent investor who has a lot of money in her or his pocket in a year, 2 years, 3 years. You know the game. All right, so let's get into it right now. We are going to go over right now. Chipotle is trading at $62.41 per share. As you know, they completed a stock split not so long ago. And aside from the expectations of investors and the investor community and a lot of people, it didn't do as well as reflected in the current stock price. 50 to 1 split is a huge split. I mean, it's not like a 3 to 1, 4 to 1 that you typically see in stock splits, but there are some reasons for that. I think that what can be taken from that is, as you know, the kind of psychology behind the total stock split activities is to make it more available to investors, the common investors. Before the stock split, it was trading at, well over $2,400 per share or even higher. And that just, it's out of the reach of a lot of people or just people at paying them. I mean, why am I going to go and spend, that much money on a stock, when I can buy Apple or another stock for $140 or whatever per share. Even Nvidia posts its remarkable and continuing uptrend and skyrocketing is now at 120, 130, $140 per share. Well, that was after post stock split. Anyway, we're going to go over I use this program called AI Ticker Chat. I think it's if you're an investor, you may want to check into it. It's comes out. I mean, the basic price comes to like $10 per month, and you can call a lot of good information from it. What I'm doing is pulling up some of the basic financials and doing some comps to other similar retail industries in the space, like Starbucks, McDonald's, Domino's, and you can tell the market cap um, is around 85 billion, and compared to, I guess, one of the closest, though completely different sector. Starbucks is mainly in the food, or I'm sorry, in the drink sector, but in terms of if you want to draw out a somewhat similar game is the Starbucks coffee, and they're at 89 billion. The price to earnings ratio, astounding, 66 to 66.1. If you take a look at Starbucks, only 21.6. And so what that's indicating is that companies are seeing um, companies are seeing a potential revenue or increase in the revenue to net income of the company, or see that future potential in Chipotle. I think that's reflected in the stock price earnings ratio. They're looking at it to continue its growth and outstanding profitability in the food and beverage space. Now, interestingly enough, some of the reasons why I think that reflected in the most recent quarterly earnings report, the revenue for the first quarter is $2.7 billion. And essentially, that is essentially a increase of 14.1% compared to first quarter of 2023. Wow, that's great. That's really fantastic. And the increase in total revenue was driven by new restaurant openings. Also, a lot of the retail stores will get their numbers on the success of their current business or comp store. So, for example, if if I was Starbucks and they had a location at, let's say, you know, San Francisco, downtown San Francisco, and they're using that store and they open that store. Let's say they opened that store 3 or 4 years ago and they see that stores increase in the restaurant sales of that location have increased significantly over percentage over year to year basis. They can say, hey, overall, our company is doing well. So they use that as kind of a benchmark, or retail companies will use that as a benchmark to kind of gauge how their current sales and future sales are going. And so the 7 point increase in comparable store sales is a great indication of the restaurant efficiency operations, how they're doing, and also the foot traffic coming into the store, which is great. It's a great indication. Let's see. Well, also they opened 40 new 7 restaurants in the first quarter, including the 43 locations of the Chipotle Lane, which is essentially kind of a so people can pre-order through their mobile apps and have their orders ready for them rather than going to the store directly and having to, wait in line and get the new get their orders. Um, so also some interesting and good numbers is the operating margin for the first quarter was 27.5 compared to the 25.6 uh, a, a year ago. So they are making improvements in the restaurant operation and efficiency. Great. And net income has increased significantly from last year to from to 359.3 million or 3.01 per diluted share compared to 291 million and $10.50 per diluted share in the first quarter of 2023. Outstanding. Now, we go over some of the the end of the quarter results, the financials in terms of what they're doing with their sales revenue, earnings per share, and how their restaurant efficiency has overall led to great opportunity and growth. But let's take it from a look of a consumer. I'm sure that you or some of your loved ones or some of the people may use Chipotle or go to Chipotle frequently. And I know I myself have a young family and simply don't have the time and effort during the day to go and cook for myself. So you want a reliable, good restaurant that offers good quality food that's somewhat or fairly nutritious that you can offer for your family members done quickly. And I think that Chipotle is certainly one of those types of restaurants. And it's a testament to the fact that not only have they been increasing their foot traffic and annual sales for their restaurants, but they're working on operational efficiency, their rewards members program, and also their mobile ordering system, which is leading to greater increase, greater efficiency, and greater sales. And if you take it from the paradigm or the point of view of this is a place that I shop at, or this is a company that I use, or a service that I use, and will continue to use. If you look at it from the standpoint of that, then certainly, aside from the numbers and where it's going, that it's certainly a good company to invest in long term in the retail area, retail space. Anyway, I hope you enjoyed this brief synopsis on AAA post 50-1 stock split and why I think that you should hold it as a long-term play. I certainly do myself, as well as other good stocks in my portfolio, like Costco, being one from a similar sector, and other stocks aside from the tech stocks that I'm heavily into. In case, thanks again for joining today's video. Don't forget to click and subscribe. And until next video, have a good day. Take care, everyone.